Oil continues trading in the red on Wednesday. Brent crude has lost 5.5% in less than a month, while American benchmark WTI dropped by 8.6%. The Russian currency keeps holding at the level of 61 against the US dollar, despite negative external factors. Brent crude was seen at the level of $62 a barrel early in the session. However, it retreated later in the day to trade at $62.48 per barrel. Since the beginning of the trade, benchmark crude has lost 1% of its value. WTI has also extended losses following the release of industry data on oil inventories. Today, WTI has fallen by 1.6% and is currently trading at $55.93 a barrel. The weekly report from the American Petroleum Institute revealed much bigger than expected increase in U.S. stockpiles. Today, traders will also focus on the official report from the U.S. Energy Information Administration. Oil prices are weighed down by concerns about increasing risks of coronavirus epidemic in China. Besides, market participants are worried about a possible decline in oil demand amid current abundance of energy supply. The outbreak of coronavirus in China has negatively affected the market sentiment as traders seriously consider new disease as a potential global threat. It's reported that the Chinese authorities are taking urgent measures to prevent spreading of the virus, while the World Health Organization will continue assessing the risk of the new disease. Meanwhile, investors prefer seeking support in safe haven assets. Early in the day, the US dollar has advanced against the ruble and broke through the mark of 62, but it failed to hold there for long. The dollar-ruble pair edged lower to settle at 61.84 later in the trade. The increased amount of currency earnings paid by the exporting companies may stop the pair from rising. Nevertheless, the dollar-ruble pair is still likely to return to the range of 62.5 in the course of the session. The auctions on federal loan bonds held on Wednesday turned out to be profitable. However, it did not provide any real support for the ruble. The upcoming peak of tax payments in Russia does not seem to influence the currency as well. The ruble is mainly pressured by falling oil prices and low risk appetite. If the external situation continues deteriorating, it will push the ruble even lower.